Hi, today is October 31st, taking a look at Apple, which reports after the bell tomorrow, November 1st, Thursday. So we're looking at the daily chart, the roadmap for Apple, backed out and with all the price levels and text notes taken off of it. The main elements I want to talk about here in this video are the rising channel and these blocks that mark measured move, sort of stair-step marks for advancing pricing. And then there's a big gap left down here. That's what this blue bar is, measuring from the close into the August earnings report to the low that it made the following day after earnings. So that's a big gap that's left there. It's a $10 gap from 187 and from 197 to 187. So also in here, you can clearly see the simple moving averages. Here's the 200-day simple moving average. That would be involved if there was a mishap or a misstep with earnings and it pushed down to fill this gap. That would get involved with also trading around the 200-day simple moving average. Right now, the 100-day simple moving average is what was literally bought the other day when it flushed down with the rest of the market on Monday of this week. You can see that the low of day pressed down through the 100-day simple moving average, but it came back and closed well back above it. Up here, back up inside the channel, you have your 50-day simple moving average, which was doing great as far as holding support went. But all of a sudden, around October 10th, we started seeing it break support on a closing basis and chopping back and forth. One close above, one close below, back and forth and back and forth. Until finally, around a week ago, it started closing below on the 24th of October, and it has closed below every day since. When we look in a little closer today at what went on with this nice rally that we saw here today on the stock, is that the high of day was a direct fail of the 50-day simple moving average. So you can see how important that's going to be, and that if it's a nice report tomorrow night, you want to make sure to know where your 50-day simple moving average is at. If you're interested in buying calls, you might want to look for things that are near or just above the 50-day simple moving average, because that way, if you're wrong and they miss and they sell off a bit, you might be able to get in there and sell short some calls against where that 50-day simple moving average mark is at. Okay, so I hope that made sense. If it didn't, then just DM me and I'll talk you through that style of a trade. As far as the closer moving averages go, the 20 and the 10, you can see that it opened and gapped up today right on the 10-day simple moving average. But unfortunately, when it couldn't regain the 50-day, it lost the 20-day that it had regained, and it came down and it closed just underneath that 20-day. It also closed just underneath it also closed just above the 10-day simple moving average like the S&P 500 did. But in any case, it would have been nice to see it take out that 50-day simple moving average and close above that, and maybe if it had, maybe we would have seen the S&P 500 follow through as well, because that was kind of a heartbreaking close today too. We thought maybe we were going to get a rally up over the 200-day simple moving average on the S&P 500, but it was not to be. So looking in here a little closer at what's going on, like I said before, there's a big gap down here, 197 to 187, that is still left unfilled from the August earnings report. There's a big gap left now between Tuesday's close and Wednesday's low of day from 216 on down to 213. So if it's a mildly bad report, maybe it's going to fill this gap and retest this low here. If it's a report that people want to sell 9 ways to Sunday, then maybe it's going to be pushing all the way down to this gap. If it's a good report, it's going to take out the 50-day simple moving average, and it's going to go back towards this 227 mark. This 227 mark is sort of like one of the stair-step blocks that I've been using to sort of do these measured move pricing targets. And 227 was one that it met back here at the end of September, and then it peeked its head up into the next block that would take it up to 242, from 227 to 242. It only made a high of 233 before selling off. 234 had been another set of measured move blocks that I was using, and that actually worked out perfectly for this high up here. But I changed out the stair steps just because that one was getting a little long in the tooth, and I found one that I thought looked a little bit better. And lo and behold, it is working pretty well, because you can see that after it fell off this all-time high, it came down and it tested back to 227. It closed right on it, but then it rolled over and fell back down. So if it's a good report, once again, you're going to want to see it break out above the 50-day simple moving average and work its way, or maybe just rally its way right over 227 and hold that then as support. If it can hold 227 as support, you've got the center of this rising channel that, even though it broke, it did seem to specifically gap back open right in it today. So I've kept that channel on it as is, and the center line of that channel comes in right around that 234 price level, just below it, and over the course of the next few days, that channel center will rise above 234. So you have 227 and 234. So if you're looking for calls that are, out of the money, and you feel like it's going to be a bullish report and that Apple's going to save the world, you might want to start looking at 230 or 235 calls. If you want to keep it a little closer to the money, you try for a 225. That's probably a really popular strike with lots of open interest and volume. Just make sure you're not overpaying for it, because sometimes when there's a lot of open interest and a lot of volume at a strike, it can tend to be a little bit overpriced. So again, that's something I can go over with you guys. If you want me to, I can do another video on that. Anyway, I hope this helps you out with trading Apple for earnings. Good luck and good trading.